Obviously, in the real estate business, we are trained, if you didn't know, to advise our clients as realtors, as representing them to have a home inspection. But it's becoming more and more enticing as you enter bidding wars with, forget 100 people, let's say 10 people, to really think twice about whether an inspection happened before or after you submit an offer and close on that property. Many of them are happening after closing now, which can be expensive, but so can a $1.5 million detached. Good morning, investors. Bradley here from Watson Estates, and you're listening to the largest and fastest growing podcast for Toronto real estate on iTunes, Spotify, and Google Podcasts. Thrilled you could join us today on our show as we really talk about the immediate and looming consequences of the Bank of Canada not increasing the interest rate this past week. It was widely expected that they would. We're going to dive into what's going on in our market and where you can purchase a cheap, affordable house in and around the GTA, just some of the fun stuff. We don't want to get into too much of an intro. I like to get right into the content, but I will say please like and subscribe. You can share this episode, tag us at Watson Estates. But here we go. And I know jumping right into content really doesn't resonate with truck drivers, those listeners. They do like their trailers, but we also have a lot of these truck drivers approaching Ottawa today, actually, as this episode is being recorded. So we're going to have a little bit of fun on our show, as we always do. And I know you guys are going to enjoy some of our dad jokes, or Brad jokes as they've been come to be known. But here we go. We're going to have some fun. We're going to learn some stuff, and we're going to do it together. As a broker investor myself, I figure why not share content with friends just like you? So let's start off talking about the market. We're going to start off with a Star article called, listen to this, the title, 100 Offers on a Single GTA House, Why Scarce Listings Are Further Driving Up Home Prices. Imagine getting 100 offers and then saying no, refusing the best offer. What a world. Not to say that happened in this scenario, but it would be funny just to flex, you know? But when we look at the months of inventory, this is really the starting point for where we're at. We have the stats from 2021. As we round into this month in the next week or so, we're going to have stats for this past January. And having spoken with lawyers and other realtors, I anticipate the closings are going to be very quiet in February and March, but we'll watch for that, see what kind of activity is actually happening. When you got low listings, you end up with low number of sales. I think that's what's going to spill over in January. But let's look at what happened with the months of inventory as we dive into each specific segment. The city of Toronto had 1.1 months compared to 2 months last year at 1.7 in December 2019. So Toronto itself, despite everyone, fleeing the city, has gotten significantly tighter than it has been in the last couple of years. Brampton is at 0.6 months, meaning less than a month for everything to sell off, whereas in December of 2020, it was at 0.9. Aurora went from 1.9 months in 2020 to 0.9 in the same period, and Markham saw a similar drop. Ajax, Oshawa, and Whitby were all under 1 month supply a year earlier, but had slipped to half a month or less by December of 2021. East, West, Central, all across the GTA, we see very, very tight months of inventory. Just to put it into context, how many properties are we talking about here? So looking at the numbers from Monday afternoon, there were 25 detached houses for sale in Pickering, which has a population of 92,000 people, and 121 listings, detached listings in Brampton for a population of 600,000 people. Plus, this is coming from a Royal LePage Services agent, Anne Alcock, just asking her about what her thoughts are. And as she's been reviewing the market, it's a very tight market, obviously. In a January 12 Scotiabank report, they noted that Canada has the lowest housing stock of any G7 country, with Ontario, Manitoba, and Alberta having the fewest homes per capita in the country. So our country is the tightest, and our province is the tightest. Tighter and tighter. It would take 650,000 homes to bring Ontario up to the same level as the rest of Canada, according to the report. We are not just behind, we are way behind as far as supply. Yet demand, often criticized by the Toronto Real Estate Board, is the main focus of dealing with intervention and policies. Here's what Jason Mercer of the Toronto Real Estate Board has to say about that. The top of line policy moves are still looking at foreign buyers or talking about taxing investors. We've been through a few cycles of this type demand side policy intervention. When I'm at the end of 2021, I'm looking at 3,200 listings. I think it's fairly clear that the supply is a major factor that's causing affordability issues for a lot of households, and just the inability for households that want to find a home that meets their needs. Supply is the issue, Treb says, obviously. And sellers, they're hiding like Trudeau is today with the rally going on. And buyers are lining up like the truck drivers along the 401. Everyone and their uncle is headed for Ottawa, right? Except for the Vicks Vapor Rub truck. Hence all the congestion. But when we dive into specific markets, that's the detached, super tight. Condos, even worse. Condo market tightens. They say it's the tightest. The Star reports the tightest in 20 years. Absolutely the tightest since I've been around in trading in real estate. Toronto region condo prices surged skyward in the final quarter of last year, with Treb reporting some of the tightest market conditions in 20 years, affecting both condo buyers and tenants. We'll talk about rentals in a second. But when we look at the stats for the fourth quarter of 2021, here's what we see. The average selling price of a condo climbed 16.4% year over year. And there was a record 7,815 sales in that period, which was 21% higher than the last quarter of 2020. So even though we saw sales dipping in the condo space, not so much. We saw condo sales grow, which sets the stage for a big 2022. It's why when I'm looking at my predictions, my forecasts, I anticipate significant growth in the condo space. There's other reasons we talk about on our show too, but this is absolutely one of them. New listings have tumbled 29% annually, and active listings for condos plunged 65%. No new listings coming on, even less active listings as they continue to get eaten up by investors such as yourselves, leaves us with not much. In fact, the average resale price of a condo in the GTA has now surpassed $700K. Jeez. And the rental market's getting a spillover, as we see. This is coming from a CP24 article. There were 13.9% fewer condos rented in the fourth quarter compared to 2020. So there's less being rented. The number of condos available toppled 49% in the same period. It's starting to sound a lot like the resale market, even in the condo space. I was starting to get a little nervous as we rounded into 2022. My forecasts for increasing rent rates are quite high. I think I have some aggressive outlooks on where I think prices for rentals are going to end up at the end of this year. And lately it seemed as though that wasn't happening. Well, as I'm looking at these stats, maybe we're going again. Let's see. And we're starting to see a vacancy rate in Toronto, which was at 1.7, still low. And now, sorry, that is the current 1.7 is still low. It was lower before, believe it or not. It was below 1%. So that's actually generous. But across the GTA, when we go outside of Toronto, listen to this. It's ranging, that vacancy rate is ranging from 0.2 to 0.9%. Everything is full. Everything is full across the GTA. And we see a rising in prices of rentals of 13.7 annually for a one bed and 12.6% for a two bedroom. It'll be interesting to see, but there's definitely a spillover as far as the amount of what's available for rental units. We're going to continue to track that, but we just don't have the rental resources to deal with all the demand that's out there. You know, you can't pull a trailer without the proper equipment, as my trucker friends know. It'll go off without a hitch. But there's a supply and demand imbalance going back into the resale market. Here's an article from BlogTO. People are fleeing Toronto for cheaper real estate, says a report. This is from Smart Prosperity Institute, a University of Ottawa think tank. And the population has been growing much faster than predicted in the Greater Golden Horseshoe. There's this narrative that people are running from the city, which they are doing, and they have been doing for some time. But when we look at Ontario as a whole, my God, are we shocking and outpacing the forecasts that were in place before? The report, Forecast for Failure, as it's called, found that in 5 years, Ontario's population of adults grew by several 100,000 more than forecasted. And all these people need to find a home. Here's the past forecast and how we outpaced it. It underestimated the area's population. We're talking the Greater Golden Horseshoe here, Toronto, greater area, and Hamilton region, let's say. But this is the area that's growing. They underestimated the population growth from international sources by roughly 120,000 people from 2016 to 2021. Obviously, we've been boosting those numbers up lately as well. But they, at the same time, overestimated the size of the housing stock, right? They expected an additional 26,000 units that never came, which has obviously contributed to this demand pressure being higher than expected and the supply availability being lower, hence prices going up far beyond your wildest dreams. Well, the new forecast, as it were, the new forecast that's been put forward in the next 5 years, the population is expected to grow anywhere between 600 and 700,000 in the GTAH, is how they've called it. The Greater Toronto and Hamilton area, or Golden Horseshoe, whatever you want to say. The report suggests 1 million new homes need to be built in the next 10 years across Ontario to keep up with demand, which is all but impossible at this point. Even with the amount of construction we have going on, I just do not see that happening. I really would like to. Obviously, the building numbers are astronomically high when we're comparing against North America, but I just don't see that happening. But that's the call. That's what the expectation is. These trends, they say, will continue unless more housing is built across Ontario. The trend being astronomical house prices, tight supply, lots of demand. But there are a lot of factors that can play into this. And in direct opposition to what the Toronto Real Estate Board would have you believe with some of their statements, we're going to talk about what Vancouver has been able to do that has left them only slightly above in the price range of a Toronto property. Toronto is very quickly catching up to the price of Vancouver. This comes from BlogTO. As of December, GTA home prices were only 4% below the Greater Vancouver area home prices, the smallest gap we've seen since 1991. Vancouver, if you guys don't know, has been doing things a little different. They've been a little bit more quick on the trigger with doing stuff that would slow down or soften or cool the housing market. Vancouver has long been known as the most expensive place to buy property in Canada by a long shot. The West Coast city has been playing leapfrog with Toronto for years when it comes to average rent prices, but Van has never even come close to losing its status as the most valuable real estate market in Canada until now, apparently, because Toronto is catching up. The gap has been closing since 2018. And they go on to explain why that is. Thanks to government restrictions or lack thereof in Toronto's case, and such factors as immigration, supply, new housing starts, rates of housing completion, and investor interest, prices have shot up by a staggering 40% in the Greater Toronto area since 2018, in comparison to the Greater Vancouver area that's up a very small and insignificant 13%. So what did Vancouver do different? Well, in 2018, the GVA home prices were dampened by additional policy measures meant to combat affordability challenges, including raising land transfer and school rates on highly expensive homes, increasing foreign buyer tax rates, and applying it to more areas of the province. There was a lot of other things, but what's interesting to me, and in fairness to those that are calling for demand-side policies, most of these have been demand-side policies, and guess what? They worked. They worked. Maybe the problem isn't that we're focusing too much on demand. Maybe the policies that are being suggested are weak or aren't actually happening because we have loud voices, realtors, that are getting in the way of the entire thing. But ultimately, here we are in Toronto, a paradise for investors. Many are very interested. We'll talk about how interest rates are even compounding that. But with the heat of the market, there's this off-spin pressure that is coming out of it that's impacting average Canadians and average Ontarians. Little tongue twister, the Ontarians. So Ontario housing market is so red hot, most buyers are skipping inspections, say home inspectors. Listen to this, and this is probably familiar to many of you who are practicing in our industry, investors, realtors, brokers, broker owners. Home inspectors in Ontario say the hot sellers market is preventing most buyers from getting inspections done, which in turn is forcing a large number of inspectors to leave the industry due to declining business. It's getting to a point where they don't even have enough business. They're saying, to hell with this. They say the situation is also putting home buyers at risk. In a world where we rely on the GDP of real estate, inspectors, they're not along for the ride. In fact, if you ever wondered what percentage estimates we have on how many people, how many sales have included an inspection, it's shocking. It is shockingly low. A home inspector, Len Inkster, who is the executive secretary of the Ontario Association of Certified Home Inspectors, Ontario ACHI, says, based on information from his members, he estimates only about 15% of sales across Ontario now include a home inspection. whether that's close or not, that's still pretty low in a world where you kind of hope we know what we're buying. And it's led to directly a decline of home inspectors. Inkster estimates the number of inspectors in Ontario has declined by about 60% since 2017. We have less inspectors. You'd think in a market where it's climbing, there'd be more excitement and it would be along for the show. Well, inspectors are the ones that are getting their necks slit here. He says members from the Ontario ACHI, which is voluntary, by the way, this organization, dropped steadily each year from 827 members in 2017 to just 80 in 2022. Their membership is dropping in a world where it has been proposed that we kind of get more serious about creating measures and policies and having a standard set of rules for the inspection business. It's gotten to a point now where they're almost not even used. They're completely pushed aside. Toronto real estate has inspectors out here like old truckers, semi-retired. But what's being recommended? What are they putting forward that we should do? Well, inspectors say enacting provincial legislation that's been sitting in limbo would help protect consumers and regulate the industry. We should maybe, as it was proposed at the federal election level, maybe we should mandate that you have to be allowed time to do an inspection. Could that get in the way? Well, the inspectors would love it. It'd be great and blooming for their industry, but that's not where we stand today. Ultimately, we're in a position where inspections are just, it's more of a clause that you can or cannot have. Obviously, in the real estate business, we are trained, if you didn't know, to advise our clients as realtors, as representing them, to have a home inspection. But it's becoming more and more enticing as you enter bidding wars with, forget 100 people, let's say 10 people, to really think twice about whether an inspection happened before or after you submit an offer and close on that property. Many of them are happening after closing now, which can be expensive, but so can a $1.5 million detached. So the consequences then, let's get into, of the interest rate. So we know the tightness of the market as we've been tracking it, as you've heard today so far. But we, myself included, very much thought we would see interest rates climb even as early as this week. A lot of the major economists anticipated that to be the case, but that did not happen. So right now I want to get into what the consequences are of that, because we're seeing an immediate impact as it kind of trickles through the real estate industry. And so here's what we're going to start. We're going to start with the Globe and Mail article. And they really asked Tiff McClellan, why did he do what he did? What was the decision that was that he made and why? The government of the Bank of Canada spent the best part of 2 years promising to keep interest rate as low as they could go, even in the face of surging inflation. I remember when Tiff McClellan came in, he walked right into this entire low interest rate environment. It's been doing it since his entire career at the Bank of Canada. This week, though, they say he blinked. He blinked, declaring an end to the emergency phase of monetary policy, putting Canadians on notice. This is your eviction notice that borrowing costs are going up and soon. So though he didn't increase interest rates, he said it's about to happen. It's about to happen. So what exactly did happen on Wednesday? Well, Mr. McClellan and his team decided not to raise the bank's key interest rate as many had expected. And it's been at 0.25% since early COVID-19 pandemic. And the Bank of Canada holds off hiking interest rates, but they set the stage for a March increase. So there is a very high chance, a very, very high chance that we're going to see interest rates rise in the next announcement in March. Well, they say don't misread the Bank of Canada's decision as inaction. Interest rates will rise, and quickly. But they took the important step. Here's why they did it. They took the important step of ending the last of their emergency response measure, forward guidance, which is essentially a promise not to raise interest rates. The entire time they said, we're not going to raise interest rates, going to be so far out. It's not going to happen for a very long time. The closest up until now that we expected would be the second half of 2022. But for a while there, we thought it'd even be longer. Well, that sent an explicit message. This was the end. This is the end. We're cutting off the head of that dragon. They sent an explicit message that the cost of borrowing is going up and puts the bank just one step away from its first rate hike since 2018. So the Bank of Canada sure knows how to trigger investors. And that's exactly what it did. We're going to see inflation run hot. They talk about what inflation numbers we see. Inflation, a part of inflation is housing. And housing prices is kind of a baseline for that. But it's also the reason that we need to see interest rates come up. Well, the bank raised its forecast for inflation on Wednesday. The inflation's actually worse than initially expected. It now expects the annual consumer price index growth to average 4.2% this year, which is up from 3.4% projections in October and far above a target of 2%. But, we're kind of within that 1 to 3% 3% range. So it makes them happy. At least we're getting closer. But yes, inflation is going to be running hotter than they even expected in late 2021. And so we know an interest rate increase is needed, but why give Canadians forewarning if it just boosts demand, right? If you're going to boost the demand, why do that? I would think getting ahead of it would be more effective, right? Isn't that why police get to protest early? To beat the crowd? I hope we have a safe day today, and this could age very poorly if we have issues in Ottawa today, but I'm hoping everything goes safely. But as far as Mr. McClem is concerned, the choice to signal now, hike later in line with the bank's actions throughout the pandemic. They're at least maintaining some consistency of giving forewarning. How fast, though, will rates climb? For this, we need to read between the lines. So when we say we're expecting it in March, it comes very much from a comment of Tiff McClem, which is this one. We're starting at ultra low. And it's clear we need to move up. At first, I think the implications are fairly obvious for interest rates. The further down the path you get, the more finely balanced these decisions will become, the more data dependent they will become. In other words, the first few hikes could happen soon. And it also explains why many of the major economists, major banks are expecting for at least 3 rate hikes, but then there becomes a bit of tension on if there's a couple more or not. That's where the divide happens. But definitely based on his comments, things are going to happen very, very soon. Andrew Kelvin, Chief Canada Strategist with TD Bank, expects the Bank of Canada to start raising rates at its next policy meeting on March 2nd. There you go, guys. There's your window of opportunity. Also worth mentioning, the U.S. Federal Reserve hinted on Wednesday that it could start raising rates as early as March. And that's a major revision, by the way. In September, half the members of the Federal Open Market Committee weren't expecting any rate hikes at all in 2022. And for those of you familiar with how rate hikes happen, we do in many ways tend to follow or mirror what's happening in the U.S. Well, if that's the indication, then very well, March is probably when this is going to happen. That's my expectation. And if you're Canadian and you have a variable rate mortgage, this is Tiff McClem's comment, by the way, we're effectively telling you that you can expect that variable rate mortgage is going to go up. Many Canadians are on fixed rate mortgages, but for those of you who are on variable, heed the warning that was given this Wednesday. So let's look at what Bank of Canada, how they view the market. And then I want to talk about what implications I think this will have from my perspective. So as for the housing market, Bank of Canada expects activity to remain elevated in 2022, but if the pace of price growth should slow compared with 2021 as interest rates rise and pandemic-related demand for more living space dissipates. Tiff McClem said this: "We think it would be healthy to see some gradual slowing in the housing market. We can't sustain the kind of strength in housing we've seen. I think that would be a good thing, not a bad thing." This riding hot in the real estate market, I think his comments are very much in line with what the average Canadian would say. I think we could use a bit of a cool down. That's my perspective on this. This has been absolutely bonkers. Is that going to happen? I don't know. In my mind, waiting to raise rates, actually, it causes investors to have a one last big push of demand. So if there was kind of, this is our last hoorah, rates are about to go up. That's the end. The party is over, which could have been over this week. We've just kind of kicked the can down the road a little bit, rolling into the beginning of spring of 2022, when people already thought it was going to be hot. You've just bought us investors additional time. So a couple pieces of thinking would come to mind. First, one is buy quick, right? While rates are low, lock in those rates, get it done. The other is your existing portfolio. Get those refinances as your rates are high or the rates are low, values are high. This is maybe your last chance to buy something or use that money to go deeper into real estate for one last time. That's what's going to be playing out here. That's what we're going to see in the next couple months. And the Bank of Canada's inflation recommendations obviously tell us that we're going to be running pretty hot. So long term, high inflation means higher house prices. So if inflation is high, house prices will naturally follow. It's kind of a baseline that we follow, but increasing interest rates can and will, as history has told us, slow price growth. So it'll all come down to how much the rates rise and how fast, right? Everything gets replaced eventually. The best way to replace inflation is with higher rates. And the best way to replace an 18-wheeler is to have them drive themselves, the 18-wheeler. And you know what that's called? Semi-automatic. So the pressure is now on investors. This is a Star article called "Now It's a Race. Economists expect spring housing market as buyers scramble to get in before interest rates rise. We're compounding it. Benjamin Tal from CIBC World Market says, people will want to get into the market to make sure they're in before the window is closed. The window has been extended for the sake of those under variable rate mortgages, average Canadians. The trade-off is going to be investors getting a little bit more of a window into the spring market to get more real estate, boost that price higher. Tal expects the average number of homes sold to increase 20% over the next few months, from approximately 50,000 monthly sales to 60,000. He says this, we could see relatively strong activity in the spring until the market slows down in the second half of the year. The tension grows as mindsets conflict. I'm looking at this. Sellers, right? Why sell? This is what they're saying. Why sell when house prices are set to rise a bunch more between now and the second half of 2022? And buyers are saying, gotta buy now. Anyone sitting on the sidelines, this is my last chance. Because even if you followed our show, the expectation in the last couple of weeks was that interest rates would get bumped. That was pretty quick news. Now it's been made clear for all Canadians, interest rates are set to rise, but you still have a little bit of time, but you better act fast. One thing we know, until we get rate hikes being announced in Canada, Canadians can expect real estate values to soar. That's my thinking. And in conclusion, you've got 2 months to lock in rates, and home prices are going to rise during those next 2 months. The speed that they rise will ultimately decide on what the final value is year over year for this year. I think in our past predictions, as you know, it's been 10% plus. I think that will still be the case, but this might actually boost it even further. Will we see prices drop? Are we going to be witnessing the greatest collapse and popping of the bubble in Canadian real estate history? Maybe that's for another day. But the issue always comes back down to supply and demand, right? Toronto real estate is like a freaking cat. It just keeps coming back to life. It should be as simple as just like tossing it under a 18-wheeler. Then you run it over 9 times. Except there isn't a supply of trucks right now. They're all over visiting Justin Trudeau. So where do you start your search? Affordability. And this is where I want to end our show, talking about where there are the most affordable options for you in the GTA. And this comes from a Blog.to article. The average price for a detached in Toronto, if you didn't know, stands at $1.5 million. Well, there are cheaper places, believe it or not, across the province, in other provinces, but many want to stay kind of closer to Toronto, but they still want to get a deal. Well, this is for those folks. The Zoocasa report that they're talking about here finds 5 communities in Southern Ontario where people could save $500,000 or more. Here's their list. First off is Brock, a small town north of Durham region. And the winner, obviously, northeast of Toronto, comes in as the most affordable place to buy a detached with an average price of $774,500, which sounds like a dream. And it's followed by Oshawa at $964,000, Orangeville $967,000, Essa $988,000, and Scugog $994,000. Under $1 million in those 5 cities within the GTA. Sounds like a good deal to me. When we look at semi-detached, you're looking at Orangeville, which has an average price of $715,000. Not too shabby. And Orangeville actually has good deals as well on townhouses at $570,000. These won't last long. We've seen if trends in past history through COVID reveal themselves, the lower priced homes, the affordable homes, condos included, will see the massive growth, the catch up play out. These areas, if you're interested in them, take a look now while interest rates are low and while prices are still semi-affordable. But if you're considering a condo, here are the top 5. Number 1 is Oshawa, $381,000, not too shabby. Orangeville, $483,000. New Tecumseh, $517,000. Brampton, $550,000. And Newmarket, $572,000. There you have it. So get out there, investors, right? It's scary, but it's worth it. I'll tell you from experience, it's worth it. This might be your last chance, by the way, at cash flow in some of these communities. And until that is the looming catastrophic crash. But that's for another podcast. We don't have time for that today. So we're going to leave it there. Hopefully you guys learned some stuff. If you did, please leave us a comment and support the show. Share this on your Instagram, tag us at Watson Estates. And if you want to scale your real estate portfolio with or without COVID, there is room. There is an opportunity for you to scale your portfolio. You can learn more about that at the 90-day landlord course that we have available. You'll find the link somewhere if you just look a little bit on our website or whatever podcast channel, wherever you find our podcast today. And if you love our show, as I do, please leave us a 5-star review and a rating on iTunes. Very much appreciate that. But today's going to be an exciting day in news. Can't say I know anyone personally who drives a truck, but shout out to the truckers out there. And for whatever it is that you believe in, good for you. Actually, you know what? I did know a guy that drove truck, believe it or not. He was a Formula One driver, and he took a trucking job driving donkeys, I think. Never a good driver, but he did haul ass. Just like Mr. Trudeau is, actually. I'll see you guys next time. Take care and keep it real.